Greetings, everyone. I thought, based on how upset I was yesterday, that it would be unwise to talk about the Fed on the day that they proved that the bottom line on this slide, that the backbone of money, was quite a joke. So today, I'm going to discuss what the Fed did yesterday, my thoughts, and a few other things. So this is, again, just going to be a very short video talking about their decision, what I think about it, and why. uh, my ideal Fed, what they would do, a little bit about forget about my own book, and a don't do it little light story at the end. Okay, so if you watch markets, you'd probably notice that something happened yesterday at 2 p.m. because everything just shot up. Well, when the Fed was speaking, they indicated that they would be more cautious than what was previously anticipated. They said something, I believe the sound like quantitative tightening path wasn't as locked in as they previously made it sound. And they announced that they'd be patient with future adjustments to the rate hikes. Now, I'm a big advocate of patience. However, when it's with defending the value of a currency, and they previously anticipated and indicated that they would be strong with that uh, defense, the patience is what the market is loving. So when the market heard these comments, what it must have been thinking was, well, yay, we own the central bank again. We can control the rates and we can just have free money forever, and the Fed will just pump us higher and higher because we had a mini panic attack and they gave up on defense of the currency. But what the market may have missed is, despite them maybe having influence on the Fed wouldn't be doing this if the economy was as, well, booming as much as certain people love to think it is or say it is. Okay, so my thoughts on the Fed decision. Well, I think that the Fed was influenced by the market and was scared of the market, scared of its own shadow, one could say. Now, why do I think that? Well, because if the data was slowing and everything was cautious or whatever in December and they were uncertain about if they should hike, well, it certainly didn't seem that way. They were cranking up the rates 4 times a year. They were tightening the balance sheet at its full pace, and they were not saying anything about slowing or about maybe taking a break in the future. Now, yet, over the past month, they seem to be reversing that course like very quickly, going from 4 rate hikes to, oh, we'll be patient, we'll see if we need them in the future, going from quantitative tightening on autopilot to, well, we may have a bigger balance sheet than we first thought. So the way I saw this move basically was, we're giving up on trying to fix our currency. And if you look at the different markets, particularly precious metals, how they responded to that, looks like they saw something similar. So with all this picking at the Fed, do I believe that they should be dismantled because they appear to be a slave to the market? No. I believe that a Fed should have a usefulness. They were originally designed to defend the, the value of the currency that they look over or watch over. Now, to me, this would mean have an inflation target of approximately 0. Now, I'm not saying they should be immensely deflationary because that has its other problems, but low inflation, defend the value of the currency. That would be what I would think that a Fed should do. Now, instead, they have a dual mandate, which is to have full employment and price stability. Now, those sound great in principle, although on the flip side, the principle to me of doing this by destructing the currency by over 20% per decade at if they can control the inflation, seems a bit of a steep trade-off, especially because they haven't really managed to prove that they have much improvement in the or much control over the full employment and price stability. Well, full employment at least. Now you might be saying, but isn't this great? Because all the stocks that I own, or many of the stocks that I own, and gold and all that stuff went up. I disagree. While making money is great, you don't, I don't own gold stocks. I own gold stocks because I thought this would happen, not because I wanted this to happen, because this is making all currency worth less than people thought it would be worth, which is why they throw their money into stocks, because stocks and gold and anything else, because they think, you know, what's the point of having currency? Let's just have assets that are worth more than paper. Now, another thing is the Fed pumping up the price of stocks. This isn't a good thing. Everyone who likes all the price of stocks going up, I don't think they understand that that's not a good thing, but I'll save that as a topic for another video. Anyway, don't think I can remember ever being as upset as watching that decision and having stocks go straight up and yet still be unhappy because of why they're going up. Now, as for trying to talk my book, I just watched the VRIC where every single person, well, almost every single person, walks up on stage and tries to talk about why their stock, their company, their whatever is the greatest and their theory magically all seems to match whatever would benefit their company and no one else's. Oh, I'm sick of it. Now, I own a number of gold stocks. I own a good chunk of my portfolios in gold and stuff like that. But I hope gold goes up because I believe it should, to back the currency and give it credibility and value, not because the currency is losing its credibility and value further. In my view, there's a difference. Now, do I only invest in things that I think should happen or are right? No, but I dislike making money because of people, everyone else losing. Now, on a lighter note, the other day, I was on the phone with a friend. He was, I don't know what he was doing. I didn't know what he was doing at around 2 o'clock when the Fed was making their decision. We were kind of watching together, seeing if we could figure out what was going on. And now, at a certain point, I was listening to what they were reading off of what the Fed said, and we were talking about gold before, and I'm like, oh, it's going up. Or he asked, what do you think of gold? And I said, oh, it's going up. They caved. Now, a few hours later, he tells me, he's like, oh, thanks, buddy. Made a bunch of money. I'm like, wait, what? And apparently when I had said that, he had bought a bunch of JNUG, a very volatile and crazy vehicle that goes up very quickly and down even quicker. And it's a junior gold miners leveraged 3 times. But my point with this, and the lesson here, I hope, is trading a big position is on something like that is very dangerous. And trading the news is also very dangerous because you never know who or what the knee-jerk reaction and what can reverse very quickly. So both of those things are very dangerous. If you trade the news, you'll probably eventually end up delivering papers. But that's just me trying to throw in a lesson here. Anyway, it worked out for him, luckily. But it's two very dangerous things. So just watch out for that. Anyway, I hope you enjoyed this video. I don't know if you agreed or didn't agree. I'd love to hear about that, as well as any questions, comments, or concerns about anything I said. Um, but yeah, I hope you either enjoyed this or learned something, and if not, I hope maybe you do next time. Until then, have a good day, and I'll catch you around.